Hello, good morning, and welcome back to Almus Market Mornings, your daily dose of financial updates. With me, your host Shikhar Garg. Now, we've had a quite interesting festive long weekend, and over the weekend, there has been some good updates on the geopolitical front, but as well as on the economic front. We see that Kyiv rejects Russia's demand to give up Mariupol, and Turkey was also found stating that there's progress on talks of ending the war. Now, these are the kind of updates which keeps the market rocking. But one of the interesting updates or an update which reduced the uncertainty for the markets was the Fed hiking its rates. So interestingly, even more, the last week markets had a good run after this reduced uncertainty. Nasdaq had its best week since November 2020. So JK, this is quite an interesting week, and we have had good updates as well as some worrisome updates. Can you tell us more about this?
Right. Good morning, Shikhar. Good morning, all. So we are seeing good recovery, as Shikhar stated. We are seeing good recovery in stocks all across. But I can pin it down to a heavily oversold state of the market on various negative factors. One, of course, is the war factor, and the other is the oil, and then the Fed rate hike. The rally after Fed rate hike is really buy rumor, sell fact kind of thing. And because if you look at the Nasdaq, it is still 15% down from the peak, and that means it is still in the corrective territory. So this very much likely that this short covering rally will fizzle out as financial conditions are tightening. We are hearing more Fed members, including the most hawkish of them all, Mr. Bullard, calling for a 0.5% hike at every subsequent meetings from here on, and for the rates to be well above 3% end of it. So this is not comforting for either the bond investors or the equity investors, but markets right now preferring to wait out and see more economic data and see whether the consumption and growth story is getting affected. We did have some good data. Unemployment claims came at a record low of last 2 years at 2,14,000 versus 2,20,000 expected. Industrial production in US also rose 0.5%, meeting expectations, and manufacturing output was very strong. Then there was the regional manufacturing activity in Philadelphia Fed, where the current activity jumped to 27.4 from 16. As of now, activity in the US and the economy is doing very well, and we do not see why Fed should be hesitating to hike rates at a fast. I mean, at least at the pace at which they indicate, that's 0.25% at every meeting is what mostly. But if they do go for a 0.5%, that will be triggered only by inflation in the coming up inflation numbers. We'll have the PCE core inflation at the beginning of next week, which will guide the Fed on their actions. On the currency front, of course, euro is recovered off from its lows, but still not really getting into any sort of bullishness because it's again a case of short covering. And the exact impact on the European economy or the Eurozone from the war is still to be assessed. At the same time, they also cannot ignore the high inflation. So again, we are looking at a stagflation threat for the Eurozone as well, although some members of ECB are trying to say that they don't have that threat. If you look at even GBP's reaction after MPC hiked rate for the third time in succession, it was not rallying, and it fizzled out. In fact, fairly immediately after the decision, and then later on recovered. So yen, of course, is in its own zone, making new multi-year highs at 119.20. So dollar is still strong. Japanese yen, even Chinese yuan has started to move towards 6.40, although it failed once there, but it's not going down much. I think Chinese authorities have been very vehemently supporting the dollar at the lower levels and also keeping the higher fixings. So overall, we are seeing a stronger dollar and against the majors particularly. And EM currencies have been not so volatile, but I think things are not looking good going forward because apart from Fed rate hikes, we will also have balance sheet reduction, which will actually start curtailing the fund flow to EMs. So we're looking at a strong dollar, reigning for some more time overall. On the yield front, there is some calmness, but again, investors are still assessing how much the rate hike will be in the next meeting and going forward. Probably wait for the PCE core inflation this week. 2 years is holding below, holding at the recent high ranges, but the difference between 2 and 10 is now around 20, as flat as that. And any breakdown further will give fears of a recession rising. So that's about the overall global markets. But on the war front, while we are getting indications from Turkey that talks are going on well and there may be an agreement, but on the real battlefield, there is no let-up. Moscow continues to, fire missiles and attack cities, and so there is no resting even there. So it's really a finger crossed situation. What is going to happen? If you look at oil, it's recovered very strongly from around 95 levels, and that shows that the trend is still up. Supply concerns are around. There's some facilities in Saudi Arabia which were affected due to some attack, and that also is meaning more supply constraints. So oil is still high. So all of this is not so good for the rupee, which inherently should be weaker, but is only helped because of seasonal flows and exporters selling due to balance sheet considerations. So we did hit below 75.80 on Thursday, our last working day. Since then, in the offshore market, it has traded weaker along with the oil rising. We will probably be in a range between 75.50 and 76.30 for the remainder of the financial year with the flows on both sides. But going forward beyond this financial year, fundamentals at least dictate that the rupee should be weaker and should be in a range between 75 and 77 in the coming months. So that's the thing, and we look forward to a volatile week as financial year comes to an end, quarter end for all the investors. First quarter ending, there will be a lot of actions from the global investors as well. So have a nice week. Thank you.
All right, that was quite a good commentary. For you guys to summarize, we still see supply issues, and for sure there is going to continue with the supply issues because oil prices have, like JK mentioned, started to move upwards again by taking support around 95. Another supply constraint or supply issue that we'll be facing would be on the grain or the edible side, wherein both the powerhouses of grains are in a tussle right now. So guys, be prepared for good supply side issues, and like JK mentioned, we can continue to be under stress. Also, to the point starting in where he mentioned that it is more of being oversold. So let's see if there's any reduction in uncertainty further, or the betterment of geopolitics. Till then, it has been a good time. Just a small announcement for the coming days, as I'd be replaced by Mr. Swaraj Rajgopal for the coming week. So let's see how things go ahead. Thank you so much for the time being. Goodbye.